Hi everyone, I'm Cindy Ryland and I want to thank you for joining me here. In this video I'm going to share with you the tool that I use to give me insight into what the market is doing, what it intends to do, as well as shows me the levels it is likely to reverse from. I use this information and these levels to give me areas where I can place trades with a small amount of risk and high profit potential. The tool I'm talking about is Fibonacci, both retracements and extensions. And it was in learning how to use this tool with the market that enabled me to create an edge with my trading, to move from struggling to keep my account from blowing up to consistently growing it. Before we jump into Fibonacci, just a little bit about me. Like I said, my name is Cindy Ryland. I've been trading full-time for over 6 years, and like many of you came to trading after spending the first part of my career working at jobs where I held many different roles. I had no previous experience with trading, no time on the trading floor, or with a proprietary trading firm. I just had a desire for freedom and an interest in what trading could offer. I took some courses and it wasn't long before I was hooked. My love of trading quickly became an addiction, and although I was dedicating an obsessive amount of time to getting better, or so I thought, my accounts weren't showing any growth, in fact just the opposite. After struggling for a while to try to make trading work, I decided to step back and reevaluate what it was that I was really trying to achieve. I committed to treating my trading like a business and I wrote a plan for it. I also started focusing on the tools that really fit my personality, and that's when things started to come together. Using the Fibonacci tools, I was able to increase my skill of reading the market, and as my understanding of it grew, so did my accuracy and consistency. So let's take a look at Fibonacci, and then how I use it in my trading. Oh, just one more thing before we jump in. We need to keep in mind when we're trading that there are always risks involved, even when we find that setup or tool that gives us an edge. And it's very important you don't dismiss this. Part of achieving our goals in trading is taking the risk we face seriously and ensuring that we're doing what we can to mitigate those risks in order to increase our chances for success. And this isn't something that's unnatural to us. In fact, you do this every day, and every one of you is good at making risk decisions. You do it every time you leave your home and get into a car, or go to a restaurant and order a meal. When you're in a car, there is always the risk you could get into an accident. Whenever you eat a meal, there's a risk you could get sick. You weigh those risks and decide to do it or not almost automatically now, without thinking, because throughout your life you have learned how to mitigate those risks and ingrained them into your behavior. Since you can do it in your life, I know you can apply it to your trading. You just need to spend some time learning how to mitigate the risks and then applying them so that they too become ingrained behaviors. Okay, so on to Fibonacci. Where did it come from? Leonardo Pisano, who we now know as Fibonacci, was a mathematician who considered the mathematical problem of how quickly rabbits could multiply. The solution to this problem gave rise to the Fibonacci series. His model assumed a newly born pair of rabbits, one male, one female, were put into a field and that they were able to mate at the age of 1 month. It also assumed that each mating pair would produce another pair, another male and female, at the end of each month starting from the 2nd month on. Under the ideal conditions, no rabbits escaped, none died, and none were added to the field. So, with that, the question became, how many pairs of rabbits would there be after 12 months? Well, he started with 0 rabbits in the field, and to it he added 1 pair. At the end of the 1st month, the new rabbits had mated, but there was still only 1 pair of rabbits in the field. At the end of the 2nd month, a new pair of rabbits is born, now giving 2 pairs of rabbits in the field. As we move on to the end of the 3rd month, the first pair has produced yet another pair, giving us a total of 3 pairs of rabbits. At the end of the 4th month, both of the first 2 pairs produced another pair. Now we have a total of 5. Continuing with the sequence, at the end of the 5th month, we have 8 pairs of rabbits. At the end of the 6th month, 13. At the end of the 7th, we have 21 pairs of rabbits. Moving on to the 8th month, there are 34 pairs. 9th month, 55. 10th, 89. At the end of the 11th month, we have 144 pairs of rabbits. And we could keep going and going, giving us the numbers 233, 377, 610, 987, and so on and so on. Each successive number being the sum of the previous two numbers. So this series forms a solution to the mathematical problem posed, and it's known as a Fibonacci series. Okay, so I know. Now some of you will be saying, okay, great. So how does a mathematical problem of rabbits apply to trading? Well, for that we need to look a little bit deeper at the relationships between the numbers in the Fibonacci series. When we do that, we see there are ratios that can be found between different numbers. I've highlighted the ones here that I use in my trading. And in the interest of getting to the charts and taking a look at how the market works with these levels, I'm just going to give you these ratios right now. In the next video, I'll show you the calculations on how they're derived. Okay, so let's take a look at the charts and using the Fib tool. The platform I'm using is NinjaTrader, and the market I'm going to use today is the S&P 500, which is an index based on the market capitalization of the 500 largest companies having stock listed on the New York Stock Exchange. I'm using the futures contract of the S&P 500, and the tool I use is the Fibonacci retracement tool, which is found under the drawing tools. We can also see that there's a Fibonacci extension tool, but I'm just going to use the retracement tool. So let's draw it in here. And you can see that I already have it set with some of my favorite levels, the retracement levels that are within the move that I'm measuring, and the extension levels that are outside of that range. One of the things that I always keep in mind, whether I'm looking for longer term positions or day trading, is what is the direction of the overall trend. On the monthly chart here, we can see that for a while now we've been in a nice strong uptrend, making those higher highs and higher lows all the way along. When we go down to a weekly chart, we see the same thing, a nice uptrend with higher highs and higher lows. So the longer term charts are showing me I should prefer to be a buyer at support levels. And I would prefer to get as close as possible to where that next higher low is to give me the spot where I can take the smallest amount of risk for the highest profit potential. When I'm looking for positions that I intend to hold and try to capture that swing, I'm going to use a daily and sometimes the 4-hour charts to find the levels where I want to initiate the trades, as well as setting up the potential targets. So let's back up to the daily chart and see how the Fib retracements can show me the levels to look at for both entries and extensions. I'm going to back it up. Let's just back it up to where the data starts here. Since we're in an uptrend, I want to be drawing fibs to measure the moves up. So we'll draw from the pivot low up to that high. And then what I'm looking for is areas that it can pull back into to find some support and put in the higher low that turns us back up into the trend. What I want to do is be a buyer at a good support level that could be the higher low, and then look to take the trade towards the target levels set by the extensions. As I mentioned earlier, my favorite levels are the 38.2%, 61.8%, and 78.6%. Those are the levels that I'm going to look for it to retrace back into, and I'll be watching for it to show me some support so that I can be a buyer there. If it starts staying below the 78.6% level, that's kind of my last line that I look at. That's where I really want it to hold to keep me in trend going in the same direction. If it starts staying below that, well, that gives me a bit of caution that the trend has a potential to change. So looking at this move then, it pulled back a little bit below the 38%, found some support, and started moving up. It didn't quite make it to the 61.8% level that I'm looking at, but if I add in another level, the 50%, we can see that it found some nice support there and then made its move back in trend all the way up, eventually finding resistance at the 78.6. I'm just going to move forward here and look at the levels that it pulled back into, found support again at the 78.6, and then it made its move nicely up towards the -27 extension before finding resistance. Again, if we measure this move, we see that it didn't quite pull back, got below the 38 again, the 38.2%, but didn't quite pull back to the 61. Now I'm going to add that 50% in again. And what this is showing me and what tends to happen, although it's not one of my favorite levels, on the daily chart there are times that the 50% level will be respected and used as support. And then it moved up, but didn't quite make it to the extension level before starting its next pullback. I'm going to measure that move. We see that it found support here again at the 78.6 and eventually made its way all the way up to the -78.6 extension. A few pauses along the way, but nonetheless it still used the target levels. Now when I measure this next one, sometimes it doesn't pull back into the 38 or the 50%. We just got a very shallow retracement here, extremely shallow, found support, and started to make its move back up, new highs again, still in trend, higher low, higher highs, and all the way up to where we've found our current resistance and our market highs up along a previous negative 61.8% retracement level. They are levels that I want to watch and work into my trade plan for targets. Now on this last move up, as we're coming into our current highs of the year, we see that on this pullback, we initially found support at the 38.2% and then tried to move higher but couldn't move through those highs to make a new high. So this had me looking for it to trade lower. And as it moved down into the 78.6% level, which I mentioned earlier is my last line of support that I want to see hold, we can see it started to struggle here to get moving back to the upside. When it gave this close below that level, well, that was a caution for me, or a warning that we had the potential to change trend. We can see that on this day we also have the potential for a lower high here, and then as we push down below this last pivot, there's our lower low. So in this last move in here, the daily trend looks like it's starting to change, and now showing moves to the downside against the trends that we've seen on the monthly and the weekly chart. Just going to add an extension here in the other direction. And we can see that it didn't quite make it all the way down to the 127, which is an extension level on the other way that I'm going to look at. But so what does this mean to me? It means that we are potentially in a bigger corrective period, and I want to take note of how deep we can potentially pull back to. For that, I move back up to the weekly chart, and then I measure the last move up. We've got an uptrend on the weekly chart, so I want to measure the last move up on the weekly chart and take a look at where the retracement levels are. Again, the 38.2%, 61.8%, 78.6%. So we could potentially pull back as deep as 1660 and still be in an overall uptrend on the weekly chart. Right now, what we can see is that we tried to push below that 38.2% level here on the weekly, and to end the week we had a nice strong push back up and a close with a nice strong candle there. For me, testing this level on the weekly, closing nicely above it, is showing me that the weekly potentially is trying to move back towards the highs and even back in trend to give us that new higher high. If that's the case, then what do I need to see happen on the daily? Well, let's go back to that. So since the daily is currently in a downtrend, in order for that weekly level to hold and then move us back to test the highs and potentially make higher ones, I'm going to need to see the daily chart get through this 78.6% retracement level. If it can't get above that on the daily, and that holds in as resistance, well then that's telling me to look for potentially a deeper push down in that correction, and that could have us push back down to test that 38%, which was at 1752.75, and if it gets below that, we could see it go to deeper levels. So 1752.75 right now for me on the weekly level is an important level that I'm going to watch. First off on the daily, I'm going to watch to see if it finds resistance. If it does, I'm going to be watching for it to go back to test that weekly level, and if it gets through that, then I'll look for it to go lower. So how am I using this information for trading longer term positions? Well, the context I have is that we are currently in a correction on the daily chart. So if I want to be a buyer, and I want the market to be going up, then I want to be looking for buy setups at potential support levels on the weekly chart. The first level was at 1752.75, and the next levels are deeper than that. Until the daily trend turns back to an uptrend, I can either stand aside from any buying opportunities, or I can also be using the retracement levels here on the daily chart to show me these potential resistance areas and looking for selling setups there. So that's a look at using the bigger time frames for longer term positions. Let's now take a look at how I use the daily and the 4-hour charts to provide context in areas that I can use in my day trading. Overall, we know from the monthly and the weekly chart that our longer time frames are in an uptrend, and the daily is potentially in a downtrend. So we also know that we're in a corrective period overall for the market. What I want to know as I'm preparing each day for my day trading is what is my context, where are the areas that I should be looking for selling setups, and where are the areas that I should be looking to be a buyer. So I start with my daily chart, which is currently potentially in this downtrend. Why? Because it's made this lower low, and so I want to be measuring that and watching that. And I can see that after pushing to that lower low, we found some support and we have had a nice strong bounce here, with yesterday giving us a nice strong close back above this 38.2% retracement level. This tells me that we're likely to continue to reach a little bit higher, and as it comes into this 61.8% level, I will be looking for selling setups. If it moves through that level up towards the 78.6, well, that's another area that I'd be looking for selling setups. because the trend on the daily is potentially turned down. And to confirm that trend, I'm looking for a lower high to be put in place at one of these resistance areas and for it to push back down. So right now, as far as my day trading goes, I prefer to be a seller at these retracement areas on the daily chart, as long as they show me resistance and then provide a setup that I can use to short. Finding resistance at any of these levels, so if we were to push up into the 61.8 as an example, find resistance there, well then that could have us pushing back down, reaching for a lower low, which I would then be looking at some of these extension levels below us. Or even if we were to push through that 61, find resistance at the 78%, that could still push me down into some of these levels. So it's just the opposite of what we saw in the uptrend all the way along that we were looking at. So I'm going to look at these levels. I'm going to set up a couple of little zones along here. So I've got that zone up from the daily chart and this zone that if the market pushes up into, I'm going to be potentially looking for shorts. I also have this level here at 75.25 because it came up and pushed strongly through it and closed above it. But I want to look at that. If it was to revisit that level, come back down, then that could be a potential area during the day that I might want to consider being a buyer as well. So I have my context now from the daily chart. I'm going to take this fib off and I'm going to take it down to a 4-hour chart. And let's add a little bit more time. Now the 4-hour chart is the chart that I use as my roadmap for my day. I set my contact with the daily, look at my bigger picture levels, give myself some direction, but then I look to the 4-hour chart to really provide the roadmap during the trading day. Here we can see that we've moved back above this previous lower high. We had these nice previous lower highs and lower lows. We've most recently moved back above that previous lower high, and that shows the potential to me that the 4-hour could be turning from that downtrend back towards an uptrend. Now to confirm that, I'm going to want to see us find support that gives me a higher low and continues to move us higher. So I've got a little bit of contradictory information here, right? I've got the monthly and the weekly chart in a strong uptrend. I've got the daily chart potentially turning to a downward trend, and in order to confirm that, I want to see that another lower high and have it roll back down. I've got the 4-hour showing me that, well, maybe I'm going to turn back up to an uptrend. To confirm that, I'm going to want to see it put in a higher low and then turn back up. And all of that is telling me context that I'm still in a corrective period, so I don't have everything flowing in the same direction. Right now on the 4-hour chart, although we found support down here and we've strongly pushed up, I don't yet have enough information to draw a fib there. So I'm still going to use this Fibonacci, this draw right here on this last down move. But what I am going to do is change my extension levels and have them come up the other way so I can start looking at them as the market moves up. When I do that, we can see that I've got extension levels from the 4-hour fib that line up with the potential resistance areas that I highlighted from my daily. Those are zones, those are areas where I'd be looking for potential sell setups as the market comes up into it. And I also see that it gives me another area right here along the 1788.25 where I want to potentially be looking for buy setups if the market was to trade back down into that area. So let's just move this over. So this fib on the 4-hour lines up with that area on the daily chart that I said I'd potentially considered being a buyer at. I've got another level right here, and I've got fib levels from the 4-hour fib that line up with those areas that are retracement levels now from the daily. So going into my day for day trading, I'm going to be watching these zones. If the market moves up into this area, I'll be watching my smaller time frame chart, looking for sell setups, looking for it to show me resistance and a potential setup that I could use to be a seller. If it pushes through there, I'd still look to be a seller, potential seller at this area because this is a daily 78.6% zone. If it were to push down first into this level, well then I'd be watching to see if that was a level that was going to give me support. I could be a buyer and take it towards this area where I then want to be a seller. Or if it pulled back down through this area, well then a couple of things. If it starts pulling back down through that area, I'm going to look at this area for a potential place where I could be a buyer. And I'm also going to start looking at another fib, and that shows me that I've got a little bit farther down zone to get to the 38%. But that depends on how this price is, because if it moves up and moves to a high first before pulling back, well then I still don't have enough information to draw that fib. So now I've got my context of my zones from the daily chart, where I'll be looking for potential buy setups on my smaller time frame chart if it moves back down into them, and the areas where I want to also be looking for sell setups as it moves up into them. So we covered quite a bit of information today. We looked at the Fibonacci series, how I use the fib retracements with my favorite ratios to get context for my trading, and to find areas of the market where I might want to be a buyer or a seller. In the next video, I'll show you how we use the Fibonacci series to find these ratios. I'll talk about why the S&P 500 futures market is my favorite market for day trading. I'm going to show you my favorite time frame for day trading and how I draw the fib retracements on it, and I'll also share with you my favorite trade setups. You're going to receive an email from me in the next few days with a link to the next video. In the meantime, I'd like to invite you to become aware of how many times throughout your day you make a risk decision, and how good at it you are. It's a skill that definitely can help you in your trading. I'll see you in the next video.